Hi friends, this is Bank Nifty 1 hour chart. Let us quickly examine what could be the next move for Bank Nifty. In the previous video, we have expected that the market is going to crash down from this level, approximately this level, and then we have gave a target of 41,950. Price exactly touched that level and then bounced back. And after that, there is another minor flow coming down, but this minor flow has failed to close below this low. Okay, this low, and it exactly also touched the inward frequency of the major demand zone, and the touch of the inward frequency of major demand zone and a fractal bar, bullish powerful fractal bar like this, okay, is a very powerful move. Now what has happened later on? Price should have definitely shooted back. However, there is another move again back down by market makers to once again poke these lows because they are not satisfied with the kind of market they want to capture to go long. They have certainly disposed of most of their short positions at this level, but to go long, it is not sufficient for them. So they made another move in this vector, but this vector they're unable to close below this low. That's because this is going to be a market edge. Now let us try to identify if this is going to be market edge using multiple techniques. Okay, the first one I will talk about is pitchforks. So if I draw a pitchfork in the minor flow dimension A, B and C, you see that the midline of this pitchfork is being respected by the price exactly at the same point where the inward frequency of major demand zone is. So price is intersecting the midline of the pitchfork and the inward frequency at the same point. Now if I draw the same pitchfork in the major dimension, okay, so if I draw a pitchfork in the major dimension with the pivots like these A, B and C, okay, now this pitchfork, let me put it in red color. So this pitchfork has no relevance with this integration. However, if I place this pitchfork back again to the latest high, the next high below it, now you see that this pitchfork makes some sense because now there is a double or triple intersection of price where this pitchfork is being intersecting with a midline of pitchfork from the major dimension, midline of the pitchfork from minor dimension and inward frequency. Okay, so this is not a normal coincidence. This should be a powerful move. Okay, now this is done with the help of pitchforks. Now let us try to identify to examine if this is a market edge using other techniques. So the other technique I'm going to use here is Elliott wave. So in the minor flow dimension, if I draw a Elliott wave like this, 1, 2, 3, 4 and 5. So this completes a 5-leg Elliott wave, explaining that this could be an exhaustion point for sellers and could be a birthplace of buyers. So with Elliott wave also, you have got some credible information. Okay. Now, uh, what is that with respect to VWAP? Let us examine. So if I draw VWAP with the edge coming from this bottom, okay, if I place the anchored VWAP at the very low here, now the price is exactly in between the extreme two standard deviations of the pitchfork of the VWAP. So that is another confirmation that this is going to be a market edge. Now if I place the same pitchfork back again in the latest high and then see how price is going to behave. Okay, now I draw the standard second deviation in this pitchfork and then see how price is going to behave. Now price is exactly touching at that point where the standard second deviation of pitchfork is. Okay, so this is second degree VWAP integration. So far we have pitchfork, we have price action, we have Elliott wave and we have VWAP. So 4 degrees of information are coinciding at the exact point from where price reversal is happening. Let us examine this with the help of volumes. So as price is coming down from this major vector, the first vector where price has steeply fallen has highest volume, but thereafter as price is falling, the volumes are supposed to increase. However, it didn't happen. Volumes have steadily fallen, which means that this move of major sellers are not as powerful as they appear to be. Even in the minor flow dimension, as price is falling from this low to this low, the volumes aren't doing so. And in the position where the price has touched this level, there are powerful buyers coming to the picture, and these buyers are buying volumes have dominated all other volumes. So with respect to volumes also, you have got a confirmation. Now let us also examine the same with the help of relative strength index, which is another more powerful tool. So if I observe relative strength index in this latest low, okay, so from this low to this low, okay, lower low, price is creating lower lows. However, RSI is creating higher highs. Are you able to see that? Price is creating lower lows and RSI from these zones is creating higher highs. That is first degree RSI divergence. Again, back from these 2 points, price is creating lower low and RSI is creating higher high. That means a second degree bullish reversal divergence happening at the same point. So we have multiple techniques that are converging at the same point, saying that this could be a possible market extreme, and perhaps that is the reason these buyers, these sellers are unable to even touch this low. Okay, they came as close to as this. That is because of the selling pressure. However, the buyers didn't let this low to be poked. Now this could be, if this could be a possible market edge, then these sellers will not have any face or any strength to hold these major buyers, because now the fight is between the minor sellers and the major buyers. Obviously, the major buyers are going to win over the minor sellers. So if that is the assumption, then the next possible barrier for the price to reach is this point. Okay, because this is a point where price has fallen steeply and then took a break, and once it's broken at the same point price has started. It doesn't mean that this is going to be the exact edge. Price could go even further, but what I assume is that if these sellers are not able to hold the price, then the next barrier could be this one. So I'm now suggesting, for I'm not suggesting actually, this I'm interpreting that Bank Nifty is going to rise and buyers have taken control of the market. Now if that is the case, then what could be the entry, what could be the stop loss, and what could be the target? The possible long entry could happen anywhere when price touches this midline of the pitchfork. Okay, however, there's a possibility that the price may come down and touch these levels. So for that sake, we can draw a frequency line connecting all the lows. Okay, so when price touches this inward frequency line, or when price touches this horizontal slope outline of the pitchfork, in any of these cases we can enter a long trade position. However, no matter where you enter, the stop loss should be below this low. Okay, and if you are assuming, if you have already entered a trade here, okay, with 1:3 risk reward ratio, and if you are optimistic about this trade, then this price should be taking you back to the maximum level. That means to above this high, okay, to as much as this level. Okay, because if this price is going to be the market extreme, then these buyers have earlier taken the price to as high as this level. So there is no challenge, there should be no challenge for them to price to reach to as much as 43,412. Okay, 43,414 roughly. So our first target, if you're talking about first target and second target, generally I don't do that. I just give one target and that's it. But here in this case, I'm expecting to give two targets. The first one is 42,900 odd, and the second one could be 43,400 and 400 odd. Okay, this is not that I'm giving targets to, this is my analysis. So I have already mentioned that whatever position you take in your trade based on my video is a complete disclaimer, which means this is only for education purpose, and this analysis is not for any transaction purpose or any speculation purpose. So with this note, I'm signing off, and overall I am going to say this: Bank Nifty is now being taken over by buyers, and market is going to go long, slowly but steadily. So looking forward to see you in another video, and if you're interested to learn these advanced techniques, please do reach me out. I could be of great help to you. I can give you one-on-one training and then help you take better trade positions which normal retail traders might be finding it difficult. Okay, so thank you so much. I look forward to see you in another video. Bye bye.